I know y'all have heard about liquidity. This term gets thrown around all the time when people are talking about money. There's 24-hour liquidity, market liquidity, and there's even the people on Twitter asking billionaires to liquidate their assets. In this video, I'm going to explain to you guys exactly what liquidity is and what you need to know about it as an investor. Alright now, so the textbook definition of liquidity is the ease with which an asset or security can be converted into ready cash without affecting its market price. And yes guys, cash, as you might know or might not know, is going to be one of the more liquid assets out there, whereas a car is not going to be so liquid, or other tangible items for that matter. So, in other words, liquidity is the degree to which you can buy or sell an asset in the market while still having it retain its underlying value. So this basically means that the harder it is to sell something, the more illiquid it would be. So real quick guys, let me know down in the comments what you guys would think would be more illiquid, Pokemon cards or iPhones. There's two main measures of liquidity: market liquidity and accounting liquidity. And as investors, we really only need to worry about market liquidity. Now, to further explain what market liquidity is, it's basically the extent to which a market allows assets to be bought and sold at stable and transparent prices. If we go back to our example of iPhones and Pokemon cards, we know that there is a high market liquidity for both of these items. But if you're looking to trade your Pokemon cards for an iPhone, or even vice versa, there will probably be no market liquidity for that. So to bring us back to more traditional forms of investing, the real estate market is generally going to be less liquid than the stock markets. This is because in the stock markets, it's much easier to find buyers and sellers as compared to real estate. Now to wrap it all up guys, liquidity is important in investing because it's not just about finding a lucrative investing and getting into that investment in a timely manner. It's about being able to cash out after you've made profits in that same investment. And of course, we want you all to understand these terms that you'll run across as an investor. So here's a video that you all can check out that'll help out. Peace.